Well, good afternoon. Good afternoon and welcome. Welcome to another of our webinar Wednesdays. Good afternoon. My name is Kelly Bearden. I'm the director of the CSU Bakersfield Small Business Development Center, and I get to be your host today. So we're going to go through the latest in what's happening over the past 23 weeks of managing your business through the pandemic. So not as much to go over this time, which is pretty good. Lets us concentrate on a few of the issues to catch up on. One of them, of course, is the FTE issue and a few other things. There have been some changes and some things going on, but with everything kind of grinding to a halt on what's going on with some of the potential fixes through Congress, a little slower than normal, but we'll get into that. So welcome again, and let's get going. As you know by now, we are part of America's Sbdc program. It's a program that started in 1980. It is in all 50 states and U.S. properties around the world, U.S. territories. We are part of the Central California Center, which is 6 regions in California. There was a time when it was actually administered as an entire state program like it is in smaller states, but at least 6 Californias, I guess, worked better for the Sbdc program. So we covered the central coast to the San Joaquin Valley and the Eastern Sierra, parts of the Mojave Desert as well, the high desert, and all regions in between. Some very diverse geographic territory, to say the least. And you know our sponsors by now. We're going to mention them today. It's time to get them out. The County of Kern is instrumental in producing Webinar Wednesday for us in mid-state development. The SBA, of course, is the main sponsor of the program across the country. Our School of Business and Public Administration through CSUB, we're proud to be part of that school. And the Governor's Office of Business and Economic Development, along with the Blue Tech Technology Program, Blue Tech Valley, administered through Fresno State. So thank you all for allowing us to be here every week as it is now, and since 2013 doing webinars, and it's been fun. So what is new today? Well, we've got a little bit of news on Kern Recovers, and really kind of the state guidelines are kind of driving a lot of things that's happening that's different and happening. What we want to know is we want to learn kind of what is your indigestion, what is your heartburn, what is the pain that you're feeling through the forgiveness process. And I have my pain, and I'm sure my pain comes from listening to your pain. So life is pain, as somebody once said. So we'll go through the FTE calculations, some of the calculations today, but more or less some of the guidelines, and get a track going on exactly where we're going there. We also have PPP forgiveness on everybody's mind. And while we might be saying now patience could be a key, patience is a virtue, maybe it's that way with PPP. We'll explain some of the reasons why we are suggesting that. A brief PPP and EIDL update, not much to share on that. And of course, always your questions at the end that we can answer to the best of our ability. And also, let's jump to a very simple poll today. And the poll question today is going to be regarding the PPP forgiveness process. And since we have talked about indigestion and heartburn and pain, what we're going to do is we want to know what is contributing to the greatest amount of pain regarding PPP forgiveness for you. Is it spending the money appropriately? Is it understanding the FTEs? Is it the timing and the times that are going? Maybe it's salary reduction, or maybe it's another issue that we don't have listed there. So you have 5 choices: the greatest pain from the PPP forgiveness process, either the salary reduction issue, the timing of the whole thing, understanding what is the full-time equivalence that you must have in order to keep from further reduction, and spending the money appropriately, staying in your lane spending-wise. So we'll give you a few moments to vote. We got already up to 40% of you that have voted. So the pain came quickly in this case, and we're jumping up to over 50%. So vote once, vote often. Yeah, try that. So 60%, give you another couple seconds and we're going to close the poll. And closing the poll right now with 65% of you voted. And sharing the results with you. What contributes the greatest amount of pain for PPP? By a slight margin only. It's understanding the full-time equivalence. And with that comes the Safe Harbor 1 and 2 that we'll go over again today. Second, very close second, is the timing. And we have had many of you express interest, especially those of you that have a fiscal year timing. Fiscal year where your year ended June 30th and you want to get it off the books. I've heard that many a times. Other surprisingly is number 5 or number 3 with 12%. So 36% for FTEs, 33% for timing. Other is 12%, and around 10% each is the spending the money appropriately and the salary reduction issue. Okay, well that'll help a lot. If I was going to guess, I thought the FTE might have been a little bit higher, but that's okay. We can adjust on the fly today and spend time on that. And also, please put your questions in the question box. I did receive about 5 or 6 questions in advance that were emailed. We'll go over those. We'll hit the questions at the very end. So if you have another question that isn't touched on today that's creating the biggest pain for you, put it in the question box. We'll go over those when we get done with the presentation. Okay, so let's move on today. It's great to be back. Last week, those of you that were on probably heard I was in a hotel room in Florence, Oregon, and went on a road trip and really got to do something, get out, that was really kind of fun. My biggest mistake was probably coming back a week sooner than I should have. California hasn't had a good week. So with that, one of the observations I had from the road that I really wanted to share is that this pain in travel and hospitality is really global, and it's really big in talking to some of the lodging establishments. I know I've talked to some in our region, in our territory, in Bakersfield, in the Eastern Sierra, and really that kind of pain exists all over. And so, support our small businesses if you can, and do what you can to kind of keep them going. So the good news on Kern Recovers this week, and there was good news, is that the city of Bakersfield likely is going to be adding $10 million to the Kern Recovers platform. And that was news that came out of their CARES money. So they had CARES package money that was available. And I did not check the council meeting, the city council meeting yesterday, to know if anything happened directly with that. But it was a possibility from some news presses over the weekend. And $10 million would be for city of Bakersfield. It'd be administered along the lines of how the county of Kern administered their $30 million. So that's really welcoming and really good news. And hopefully that comes to fruition for the city of Bakersfield and the small businesses impacted very locally to us. The state guidelines, we're starting to see some issues that pop up, of course, with the state guidelines, and we haven't really been on this a great deal. Probably be spending a little bit more time on the guidelines, as long as so many of our businesses remain closed, or at least their main function remains closed or significantly altered. Could you imagine getting a haircut when it's 108 or 7, or could you imagine the poor person doing that work? And I feel for you, all the people that are out waiting tables and cutting hair and doing things outside because you cannot work inside. And of our 3-county area of Kern, Inyo, and Mono counties, we had one county that stood out all on the state block of not being on the watch list, not being on the monitoring list from the state of California. And apparently, I think as of today, that ended, and Inyo County is now on the monitoring list. And so with that comes not only the state mandate of businesses that are closed statewide, but it also mandates then a number of other businesses to move in. And maybe we'll look at that real quick. Let's jump into that particular website and see if we can pull up what we're doing in this particular area. So let's go to Kern Recovers, and sharing with you Kern Recovers right now. The PPE program is still going strong. We're still seeing, from what I understand and hear, good results from that. The map shows right here kind of what has been happening. The internet's getting a little slow with the school starting back up. I'm starting to notice at home. So, of course, this was the program where $5 million was allocated to purchase PPE, sanitation, and other supplies. It is scheduled to end at the end of this month, of which the county will determine if there's need to continue. We know that there's the disposable masks, the gloves, the wipes, and the gel, and a lot of other programs. And kind of here's what you see, what has happened so far with Kern Recovers and the PPE program. 74 different industries and 1,228 businesses have participated in the program that have benefited about 21,000 employees. So I know in our 3-county area, also in Inyo and Mono, the Chambers of Commerce, the Bishop Chamber for one, and Chambers of Commerce, there's 7 of them in Mono County, the Mammoth Lakes Chamber and others have been participating in programs. If you're there, contact your local chambers. If you want to participate in the Kern program, go to the website, fill out this form right here, and you're good to go. Looking at another couple things, we're talking about the guidelines, the industry guidelines, and the Kern Recovers website has some great resources that are available, and really encourage you that if you need some type of guidance on specific industry for business and workers, this is an excellent resource to go to and to try to find for funeral homes. I know there's a few of you out there, and there's guidance on swimming pools that could be either at a physical therapist, a lodging institution, whatever, and ways to disinfect and things like that. But we're going to jump into this one that says all state industry guidelines. And what this is going to pull up eventually is basically reopening your facility and really kind of reopening and getting open. There's an employer playbook right here that has been really beneficial, I believe. It's put out by the feds, by the CDC. We'll open it in just a second. But if you have a business that is closed, and there has been a lot of press lately about businesses reopening or being open illegally, and the big thing is restaurants there had been statewide, over 97% had complied with the guidelines, which is an extraordinarily high level considering the word of the day, the immense pain that they're going through. So kind of scrolling down here and looking, you have a lot of things. We could even get into the map, what we won't get into. Of course, the businesses that are on the county monitoring list. Well, let's see if Inyo's hit that list yet. Inyo has, there it is. Inyo is on the monitoring list. So we have a large swath there in orange that is on that list. It continues to move northward. A couple of counties right here in the blue, other than it looks like San Diego County is not on the monitoring list. Looks like Mariposa and Tuolumne counties in the Central Sierra, and then getting up maybe into Sierra and Placer counties, and then a large swath in Northern California. And of course, what gets you on the list are these statistics and some things like that. But what I really want to point out is that there's some great resources that are available at the County of Kern website for Kern Recovers. So, and hopefully we'll be going back there looking for another $10 million worth of funding for our local small businesses locally. So let's stop that share and let's go back to our presentation, and let's move a little bit on EIDL, and let's just clarify. Last week we did have some guidance at the last minute, and I think we covered that in pretty good detail. Just a quick summary of what that is. It's basically how EIDL will actually work with PPP in the forgiveness process. And of the three questions, I bring this up because these are the three questions, and then there was one key point that I didn't cover last week that I wanted to make sure I covered. But if the lender, how does the lender know about the forgiveness amount? They can go into the PPP portal, which is all lenders are going to use that. It's from SBA, and SBA has their portal that lenders will go through, and actually they can go in probably by your employer ID number or what your loan number, more likely, and actually be able to pull up the amount of your EIDL advance that is to be deducted and not included in the forgiveness process. So you want to make sure as a borrower, as a borrower, that you have that information that is current and is correct. So another one is, how should a lender handle any remaining balance? So if you do have that advance, or if you do have amounts that are not going to be forgiven, the lender needs to notify the borrower as far as the date on which the first payment is due, and also let you know if your loan is going to term out in 2 or 5 years. So it'll be the amount, the date of the first payment, and also a little bit on that. And then the last question we had is if you received an EIDL advance in excess of a PPP loan, and we did see some of those, there would be no forgiveness on the PPP amount, and that's because the EIDL advance would be deducted from that, and that amount would be actually forgiven and treated as a grant. Now, last week also, we came out in a interim final rule. And remember, a lot of the information that comes out is geared toward lenders, the 5,000 lenders, but it benefits borrowers also. And so really having that information as a borrower on what the lender is getting at basically the same time is very valuable in going through the forgiveness process. So the interim final rule that was issued along with those 3 FAQs last week. So we get FAQs, frequently asked questions, which they provide answers. And then when we get further guidance, the guidance comes with an IFR, an interim final rule. This interim final rule, the key point was on the appeal process for the PPP. And I think it covered not only the forgiveness aspect, but also the eligibility, to where one of the key points I thought I read out of it. And again, this today is my interpretation of me reading through this and trying to give you the best information possible. But unlike the IRS, where CPAs are eligible to represent clients during a process, an appeals process, from what I read, it appeared only the client themselves or the attorney, and the attorney could do that. Now, if you're a CPA and you also have a JD, or it would make you obviously eligible. But it's kind of interesting that individual who could be involved in most or a lot of the process for you is not going to be represented or be able to represent you. So from my perspective on this, and reading a little bit of the interim final rule and not reading some of it, is that the eligibility issue is likely to be a larger issue than forgiveness. So, at the very beginning, there's a self-certification process, and this was made at the time of your application. And many of you I know have had your businesses actually do better, or in some cases thrive. And that was not determined to be the case. I read an interesting article on Home Depot, and Home Depot prepared for the pandemic thinking that they were not going to do well at all. And they lobbied to be an essential business and stay open, which all of you hardware store owners should thank them for that, actually. And ended up business was better. So in eligibility issues, I think it's going to be a bigger factor. And again, the eligibility issue is going to go back to when you actually signed that application form. But, this could be perhaps another reason, and we're going to go over some more later on. This could be perhaps another reason why you defer the forgiveness application. Another one is also the deductible issue on the taxability, on the it's tax-free income, but the deductions are not available, and there could be some further guidance or some Congress work on that that actually fixes that. So that is kind of cleaning up from last week. Kind of if you think you're impacted, potentially impacted by this, I would read the entire IFR. It's many pages, but it's something that you really, if it's an issue for you, you think could be potentially down the road, it'll give you the best information. Okay. The bulk of you, or the majority, had full-time equivalents as far as creating the heartburn for you, and I can honestly say it has created the most heartburn for me, and continues to do so. I think it's an area to where we're still waiting for some more guidance. We could be waiting for a legislative fix, but it's still out there and it's still creating a lot of issues for our small businesses. And when you read through it, you read through the form, the 3508 form, the one that was revised back in June, it spells out pretty easily on page 3. And we'll look at that in just a moment. So there are basically 3 options for you as far as the full-time equivalent of being able to get 100% forgiveness. And one of those is that there's no reduction in employees or average paid hours. One of the things that I think we've shared a lot in our example, our spreadsheet, is that we've looked at the cost, but also initially in the legislation that I don't believe has been fixed or changed, is it's a reduction in employees, so it's head count, and it's also in hours rather than dollars. So those are the 2 issues, reduction in the number of employees and the average paid hours. So, and the average paid hours could be the 25% reduction that's in either the salary or the pay. I want clarification. So, but the simple rule is if you have not reduced the number of employees or the average hours paid between the first of the year, and again, we're going to have conflicting and different dates, but on this one, it's between the first of the year and the end of the covered period, you check the box and you're done. So I think a number of you will find that, or some of you, a minority of you, but you will find that you have maybe added a couple of employees and business has gone on, or you've kept the same people and kept going, and it's a simple check the box here and move on. So then we get into the 2 full-time equivalents, of which this came in the June legislation that was passed to fix a lot of the things that have been done with the PPP program. And remember, the PPP program, when it came out, basically in very early April, the virus was expected to hopefully be gone in an 8 to 12 week period of time and be gone. And now it's literally 20 weeks later and we're still dealing with it. So this safe harbor came out, and I purposely reduced the small amount of text for the 3 government agencies, the 3 federal agencies that I think give us a lot of confusion on this particular safe harbor. But essentially, just to read the safe harbor from the form, if you were unable to operate between April 15th and the end of the covered period, and remember the covered period can now be extended from 8 weeks to 24 weeks at your election. So at the end of the covered period, at the same level as before February 15th, 2020, basically due to compliance issues. And those compliance issues are by those 3, and it's related to the maintenance of standards for sanitary social distancing and any other worker or customer safety as well. Requirement, check the box. I still see a majority of our businesses being able to check the box for this. With the shutdown, we've been shut down since the 13th of last month, and it's the 2nd shutdown. And even businesses that have not been shut down have been significantly impacted. So this is one that I think is going to really garner most of the attention, and I think maybe why we haven't had further guidance. So this is safe harbor rule number one. And again, it comes down to, and I know in talking to you, and a lot of you, that you want this defined a little bit better, and maybe especially after we discussed the appeals process earlier. And so I understand. So let's move on to full-time equivalent safe harbor number two. And this one is directly affected with the form itself and going through the tedious long calculations that I thought I was going to go into earlier this week. But simply put, with two other options right now and still some more guidance coming, we'll go over that a little bit, and then we'll hopefully not have to go through it at a future time. Please recall also that still pending, and we're still hopeful, that we can get 100% forgiveness for loans of 150,000 or less, which does constitute over 3/4 of the borrowers, yet only 1/4 of the money. So that's still a possibility as well. But this is really the tedious technical one that if you don't think you apply for the others, this is the one where you can really kind of jump in. And let's kind of go to the form now. Let's pull up, share with you a little bit form 3508. That's not form 3508. It deked me. Okay, so let's try to get 3508 up. And again, 3508 is not 3508. So it's my weekly battle with Zoom to see who's got a stronger will, and it's sharing this one twice and my 3508 form not. So one more try here. If you first do not succeed, be stubborn. And I guess it's going to win. So page 3 of form 3508 kind of goes into the calculation. And boy, why are you doing this to me? It's giving me a lot of options to share with you, and it's pulling up the same screen every time. But I'm stubborn. And let's see. Nope. Okay, well, page 30 or form 3508. And I do try one more time. I apologize for this. Having a little bit of a technical issue. It seems to be the same one that I keep trying to get around every week. And this time is a little more serious. So let's do this. Let's go there. And, you know, there's more than one way to, stubbornness pays out. We'll go through it this way. Okay, so here's the form, and this was revised in June. This is the 5-page form. I think you all are familiar with the first page, and it's kind of a recap of what goes on. Really, the money page on here, as I like to call it, is going to be this Schedule A. And this is where this other last FTE exemption comes on. So if we come down here, we've showed the no reduction in employees or average paid hours. Check the box there, you're done. We've used the FTE reduction safe harbor that we just had up as a screen. Check the box there and move on. Your last choice is safe harbor exemption, safe harbor reduction number 2. I think the smoke is getting into my voice or something. So all kinds of fun today. So if On this particular exemption, number 2, we're looking at the average FTEs for the preference period, and then also the average FTEs and line 13. So it's lines 11, 12, and 13 that are actually going to be coming out of your Schedule A workshop sheet. So you've seen this before. It's a lot of fun. And if you have numerous employees, it's going to be really tedious. You have a handful, you're going to be fine. But it's really kind of going through and growing this out. There might be some ways to do that, but there are ways of going back. And there's the questions and the steps for doing this particular exercise that we're trying to create something that'll help you with it. So there you go, right there. Step 1 is to enter the borrower's total average FTEs from the period of February to actually April. And step 2 would go through the pay period. Step 3 would be, I think we can show you this a little bit easier going to the spreadsheet if it lets us open it. So that's a little bit on this form. I'm not going to go completely through this one. This is the real tedious one. This is the one that nobody wants to do. If you do have to, we are looking at doing a spreadsheet that'll actually help with this process. And I'm hoping that 90% of you don't have to go through this particular process. And then the last form is the demographic form. So let's stop sharing that. Let's go back and go to see if it's going to. It's pretty cranky today. Okay. So one thing that this is the spreadsheet you've seen before. We do have another one that's coming, and it's real close. And it'll be for you, what I think you 10%ers that have to go through either of the other FTE examples. And what it will detail basically taking this Schedule E workshop that we've looked at in the worksheet that we've looked at in the past, and then going through the process of right there, of going through those particular steps. And that's the final safe harbor that's there for FTE reduction. There's a couple of things that are really kind of unique about this process and about the spreadsheet that we have. There are a couple of ways to do this. One is you can take the average FTE, or you can take the actual. It's election for each of you. And what you can do with that is, in our example, we show a lot of 20 and 40-hour employees. Well, let's say that your business has a lot of 30-hour employees or 35-hour employees that under the simplified method would count as a 0.5 FTE or a 1.0. In that particular example, on a 35, it would be a 0.75, whereas you might be only under the average FTE, the simplified method of 0.5. So let's say down here that Wilma Flint is a 0.5 because we're just using the simplified method. Yet she works 30 hours a week, and it should be a 0.75. You have a number of those employees that adds up quickly. Now, those of you that have mostly full-time employees, you're going to be full-time 1.0, bringing them back. It's going to really be those businesses that really like the food establishments and others that deal with a lot of part-timers or some part-timers. So that's the last of that particular issue on that particular FTE exemption. And here's the page 3508 that's kind of embedded in there and goes through that particular process again with that. So for the third of you out there that were having heartburn from this, I imagine you still have heartburn, as do I right now. But hopefully we will have something soon in some of those other examples that I had where we don't have to go through this entire PPP Schedule A worksheet in order to complete the entire process. Okay, And now I think everybody's feeling my FTE pain. So back to what we have here and back to what is going on. Stop that share and get back in the presentation, and then we'll get to your questions in a bit. But we're going to jump right now and we're going to go over to some of the things where we're kind of hanging on and kind of as individuals we're kind of tied into. And as you know, our stimulus program is kind of still hanging in the balance. And we were kind of hoping for a number of items here. We were hoping for the blanket PPP forgiveness, where we don't have to calculate FTEs, fix the tax mess of $120 billion, which is having us not claim the actual income that is generated, but also not claim the expenditures. And that makes it very difficult from an accounting perspective, ending up with two different messes. We hope to have a PPP2, and we hope a modified pandemic version of the SBA 7A loan, about $100 billion. And we hope to see more relief for underserved markets and also more guidance. So there's three more good reasons. We had three old reasons that we'll look at in a second, but there's three good reasons. Additionally, as I continue to advocate for the blanket exemption for 150K and under, 86% and only 26, kind of touched on that a little bit earlier. The other thing is really the SBA is going to need to allocate significant resources and a tremendous amount of resources toward the forgiveness process that could hamper growth activities. And the same thing is going to pertain to the smallest lenders and the smallest borrowers who will be impacted the most as small businesses need to really focus on cash flow, their business model, and survival. So three compelling reasons we believe in why a blanket exemption makes sense. The one bad reason, of course, is going to be that fraud is going to be harder to catch. And having 5 million plus PPP loans go through the forgiveness process was another layer of actually catching the fraud aspect of it, of which there were some pretty intelligent written algorithms to catch businesses, and even caught a lot of businesses that were legitimate businesses going through the PPP process. So those are the new reasons. The old ones are it's basically 150 days for those to actually 150 days between the lender and SBA to get an answer, and the timeliness on that is creating some issues for some borrowers. But also what it does is it's the earlier borrowers would potentially need to negotiate a 5-year term. That's the June 5th, pre-June 5th, when it went from 8 to 24 weeks. And you don't know right now if you're going to have a 1-year term or excuse me, a 2-year term or a 5-year term at the 1% interest rate. Moving along, some of the things that we favored in the small business, well, the only thing we are adding to this particular list is the last two, which would be an increased EIDL amount. There's a lot of pain out there for bigger businesses that have received $150,000 EIDL as the maximum amount at this time, whereas we still see that there is still around $200 billion that's left in EIDL through the rest of the year. So a lot of our small businesses have expressed a need to increase the EIDL maximum up from the 150 for certain borrowers, and maybe those in certain industries that are most heavily impacted, as we were looking at with the PPP2, that again wasn't going to be as global, but it was going to maybe provide more relief for those most significantly impacted. And of course, love to have some more guidance on the FTEs, especially after the last 20 minutes. So talked a little bit about the non-deductible PPP expenses. Your PPP loan is not taxable income, but the deductions right now are not. And these are only things that Congress are going to be able to fix. And the lawmakers are struggling to come up with an agreement on this, or on the global stimulus package, which this could be part of, and maybe it won't. The second PPP we talked about, that's what businesses want as well, the 190 billion. Not much new on this that we covered last week. Also, except that there was at least bipartisan support for this particular program, but it's going to probably take a larger program, a larger stimulus in order to get it done, and we don't know when if that's going to happen. So also, the really thing that excited us a couple of weeks ago was this new lending program that could be potentially credit lines that's going to be potentially administered under the SBA 7A. As small businesses, we really want this. We want this moving forward, and we need these capital programs to survive this issue, this virus. So it extends long-term low interest rate funding. It'll target a lot of seasonal businesses that had their entire seasons wiped out, and also will work in opportunity zones and other low-income census tracts throughout the country. And we have seen results and have read about where minority business owners are receiving the information far less. And there's our EIDL numbers. We talked a little last week in just condensed version of the presidential order, which we really don't know what has happened. Really not much has happened since last week on this. Did see that the National Association for CPAs, I believe it's the AICPA, came out and was hoping to get further guidance on deferring the payroll tax. And the deferred for payroll taxes would be, at this moment, I believe, for employees, that would be the Social Security share of 6.2%. Student loans and also the eviction ban are part of the presidential order. And we're going to be back next week, but let's get to your questions. So if you have questions, we have a little more time than we usually do for Q&A this week. Partly because I wasn't able to pull up the new spreadsheet that I will hope to introduce maybe next week on FTEs and some of the issues there, but we do have some questions that you might have. So let's get to those right away. Some of the ones that came in by email. This asks a PPP question on what's the difference between the 8 and the 24 weeks. And really the fundamental difference between 8 and 24 weeks is it allows 16 additional weeks for you to spend your money. So a lot of borrowers earlier, before the new legislation, the Flexibility Act, the PPP Flexibility Act that Congress passed in June, this allowed it to go to 24 weeks. So that is one of the main differences, but it's also on the forgiveness side of things, because, we saw where it could be at the end of the covered period. So it could be at the end of that 24-week period, or it could be sometime during that period. And that's really kind of where the timeliness is maybe creating heartburn, where it's actually tied to the FTE issue. And the reason I mention that is because we saw on one of the FTEs is that you can now go 8 weeks or at the end of your covered period, which can go up to 24 weeks, or when you file for forgiveness. And filing for forgiveness is potentially, maybe you wanted to file for forgiveness 3 weeks ago and you're still in limbo. So that's that question. If you're funded in May, no, you do not need to stick to 8 weeks. You can go to 24 weeks. You can go to 24 weeks and you can actually, it's an election that anybody can make that has the PPP. And the benefits over 8 and 24 weeks, we covered that a lot in the past. And it's in the one spreadsheet that wants to be shown today. So let's pull that one up and kind of go through the benefits real quick of what we have there. And it's under this one we call 8 or 24. And so the benefits of why you might want to go 8 or 24 weeks is 8 weeks. You want to do 8 weeks might be preferred if the funds are expended during that line, and also it's likely full forgiveness. You met the FTE requirement without needing to rely on a safe harbor for those 8 weeks, and you've spent the money on payroll or whatever means you have appropriately, and you want to get done with it. You want to get it off your books by June 30th. A lot of fiscal year businesses in June 30th. And in one case, I've had conversations with people where it could affect some of their other credit lines that they have, because it affects being on the balance sheet. It affects some of their liquidities and their debt ratios that they have that are in place with their other loans. So there are some issues why this is happening and why people would prefer an 8-week and would prefer to get the forgiveness done relatively quickly. Why 24 might be better? Well, obviously you have more time to expend the money. It's easier to reach a 60% payroll goal. With 8 weeks, you need to stick with 75. Cash flow augmentation might be better if you spread it out over a longer period of time, kind of ease the pain over a longer period, and also can still file for forgiveness. And you need the 24-week period if you have the maximum pay for a business owner at $20,833. And so there's that question. A couple of other questions that came in is that is forgiveness portal administered through SBA, Treasury, or lending bank? It is actually an SBA portal that all banks will go through. So it is going to be a uniform portal from SBA. And we talked about the blanket exemption potential, any legislation. It's been very quiet on that regard. And paper versions of the application, forgiveness application, that's a good question. And it's going to depend on your lenders. Again, there's over 5,000 lenders. It looks like many of them are going to be using a digital process. So there could be a platform that you go in, and maybe what you do is you fill out the information. I would maybe, if it was me, if I had my PPP and I was ready to go through forgiveness, what I might do is I might take either the 5-page form or the easy form if you apply, it applies to you, and I might fill it out to the best of my knowledge and then have it ready. So if you have a portal that it needs to go through, it can go through that particular side. Okay, some other questions that we have. And it's start right off with, we want to get it off our books ASAP. And so I imagine that that's probably one of the reasons. The forms have been released for forgiveness. It's the process. It's all on your lender right now. Some banks, we had Mission Bank on a couple of weeks back, 3 weeks ago, and they were going to start going through the process at this time. So it's going to be the comfort level of your lender of dealing with SBA on a lot of the issues. And for some of us, some of the issues have not been resolved. For others, it seems like it's pretty straightforward and moving that direction. So, so that's kind of the process there. You got the 24-week loan from SBA. How do you elect the 24 weeks of spending the fund? I think that is a good question, because we've never really gone through the semantics. We know it's an election, but I think it's just an election of you using it. So, it's really kind of been that. Just getting feedback on my volume. So a lot of it's my voice, losing my voice during this one. Can a bi-monthly employer elect a 28-week reporting period? No, it's 2024. And again, I think that what happens is that you have to go with the standard. Employers that have a payroll frequency of 14 days and less are the only ones that can have a different reporting, the alternative reporting period. If you are a bi-monthly, or you pay twice on the 1st and the 15th, or the 15th and the end of the month would be more likely, then it is considered to be larger than that, and you have to stick within the 14-week period, the 24-week period, and it has to be aligned with when your loan started. The EIDL loan amount, will it be deducted from PPP forgiveness? And that is correct, yes. If you have a PPP and you have an EIDL advance, so it's only the EIDL advance. If you have an EIDL loan, it's a separate document. You sign separate loan agreements, and it's completely separate. However, if you receive the advance, so there's a chance you could have received 3 different relief type lending packages. So if that's the case, If it's the advance, yes, the advance will be deducted during the form process, and it will not be forgiven. If it's the EIDL loan, it'll be just completely separate, and it'll be a separate loan altogether. I applied for a PPP loan before receiving my $8,000 EIDL advance. PPP was approved for 25. I've properly used all the funds. How much of my PPP will be forgiven? If you've properly done that, then you should receive 100% forgiveness on the $25,000 for the PPP, and the PPP will be 100% forgiven. However, your $8,000 EIDL advance will roll through and not be forgiven and be a part of the loan proceeds that will not be forgiven. Farming question here. With regards to farming, it's impossible to keep the same amount of FTEs. With the fluctuation, how should we address that? And I would really anticipate with all the issues going on everywhere, but also in the farming and food processing segment, I would expect there's going to be more guidance, and there could even be guidance on that from USDA. But since it's in regard to probably, I assume you're talking about the PPP loan. It's right now, it's an answer I don't have for you. I hope to have it soon, and there's going to be so many variations of this that we've already had that have been difficult to answer. But with farming, it depends if it's production agriculture or maybe value added. I'm assuming it's production. That I think, and farming is pretty much a seasonal business. You might even be able to look at it from the seasonal consequences of it. Is the cash compensation per employee the same as compensation? It's a good one. I don't know. I believe it's the same. Cash compensation, we discussed a little of this last week, and cash compensation can be wages, it could be salary, it can be also a bonus, it can be an increase in pay for the stress and the risk that you're going through, hazard pay. So I think that all of those will include that, including bonuses and other things. We are our business. My husband and I are our business and have no employees. I work full-time in the business. Can I apply for PPP? Unfortunately, PPP right now closed back on the 8th of August. So you would have been able to apply if it would have been based on your off your tax return or your Schedule C, your 1165, or there's other options also, but it would have been based on essentially 2.5 months of your net profit. There might be an opportunity for you if you're in the city of Bakersfield to actually, if that's revived through Kern Recovers, to actually go there or to look at the locality where you are and see if there's other programs that might be able to show up. And I'm sorry with the acronyms, EIDL does stand for the Economic Injury Disaster Loan, which is the SBA product, the SBA disaster loan that you apply directly through SBA for and not a member bank. Okay, I borrowed $165,000. I imagine that is from the PPP program. Can I apply for blanket exemption if I pay back $15,000? Would have probably been a better use of your time today if I would have gone back through the PPP form. But going through that particular form, we went through it a number of weeks ago. What you'll find is that it's a sliding scale on forgiveness. It's not you hit 100% forgiveness or you get 0. So what you'll find is that it could be beneficial to you to pay it back if you feel more comfortable paying it back and not assuming that. If you did have the 15,000 And it works as a percentage, so I don't know exactly if it would just be a straight dollar for dollar. In some of the examples we've shown in the past, it has been more or less a different format to where it is actually a percentage of the amounts that you spend. But let's say it's 15,000 in your case, you would have the election to actually most likely you would have the election, I should say, to either term that out over 2 or 5 years, depending on when your loan originated, or you could possibly pay it back. We haven't really seen the procedures for paying back amounts through this process. So is Kern County offering additional assistance? The PPE program is still available. The city of Bakersfield might have a program that's available soon. Should we wait or should we apply or wait for forgiveness? Well, some of that might be determined by your actual lender. And because many lenders, and we talked last week about two major banks that were waiting until either August, or one was even a little bit indefinite, wanting more guidance in order to do that. So it's if you have the ability to actually go through the process, it's up to you. It depends on also what you've done. Everybody is managing these particular issues differently and their PPPs differently. So if it was me, I would probably, if it wasn't creating a great deal of reason for it to get over with initially, I would probably wait until I had more guidance and more information. But of course, you should consult your lender or your lender's website on what they're doing with that particular. Because remember, the whole thing is processing through the lenders. The lenders are the ones that are uploading all of the applications to SBA. And so it is really varying greatly from lenders, where we had Mission Bank on saying that they were going to start on August 10th. And that was the day it first opened. And they were going to beta test a block of, just kind of see where their issues were going to be, which was made a lot of sense. So other lenders, though, are taking a different perspective, and we'll see where they go from that. Is the executive order going to impact federal unemployment funding anytime soon? I don't have an answer for you. I've heard the executive order. I haven't heard very, very little on anything after the executive order came out on that, and also on the stimulus that's kind of hanging out there. There's a stimulus deal that's got to get done. And I'm sure it's going to get done. Now we're into convention season and some of the other things that are kind of getting in the way potentially. I did hear news yesterday that potentially the House might be going back into session regarding the U.S. postal issue and the election, and maybe that creates an environment to where being back together that they can discuss, or the House can discuss with the White House, which the House leadership and on the Democratic side with the White House is more realistic. Okay, is there an option to obtain assistance to hire new employees? Frank, there is. And if you're having a problem hiring new employees, I would really suggest that you reach out to America's Job Center. They have an on-the-job training program. I'll share that information in our potential feed that we feed out to people this week, information. I doubt if I'll have the spreadsheet, but maybe we'll have some of the other guidelines, state guidelines, and some of the other things that go out. But definitely, I will share with you the America's Job Center brochure and information and contact to where you can contact them. And again, it's like the Sbdc program. They are throughout the nation, throughout the state, throughout the region, and locally over on Cottonwood in Bakersfield. So we'll be able to send that out to you and get you that information. Okay. Regarding the PPP, if the payroll percentage has been met within I believe that's going to be the 8-week period, but employees haven't been rehired yet because of the virus, would it be wise to go 24 weeks? It's going to depend on if you meet either of those other exemptions and how comfortable you feel or your lender feels. So if you've been in, the main thing is the FTE in that exemption. It sounds like you've been impacted and maybe have been closed, or maybe there's other incentives. But it could be very wise to go 24 weeks. That's really the nice flexibility that you have, because you could potentially spend the money over 8 weeks, and you can potentially spend it over 24. And it deals with costs that have already incurred, money that's already been spent. So you really don't need to have that particular expenditure on mind when you spend it. So you could have spent something in May and said, well, I'm not going to use that, but now say I'm going to use that, if that makes sense. So, it's a case-by-case basis. It's based on everybody's particular business and, things like that. I believe the city of Bakersfield is going to be within the city limits of Bakersfield for the new round of $10 billion for Kern Recovers. Through the Kern Recovers platform, the city of Bakersfield money. We'll keep you posted on that as developments become available. How much can I borrow for an EIDL loan? The economic injury disaster loan is a set formula based on your gross profit, and it's an algorithm that SBA doesn't share. The maximum you can borrow at this point is 150. So the maximum loans are being made for 150. Throughout this process, if you applied in say the middle part of March, toward the end of March, you might have been eligible for a $500,000 EIDL loan, and then it was reduced to 350. And in order to make the program more universal for most small businesses, it was lowered to 150 to keep funds available. So you don't really designate an amount. It is open until December 31st. If a part-time employee self-reduced their hours or left your company to take full-time work during the covered period, will the forgiveness be allowed? I would say that we do have exemptions for that. If you have people that have left, that have felt unsafe returning to work, that took a job somewhere else, potentially a part-timer, and those all count. If they stayed on unemployment, in the past we've covered where you need to contact the state unemployment office. I don't know how to do that, and last time I checked, they were very, very, very busy. So there are a number of exemptions if you're using, and that would be the last one that we covered with the spreadsheet, and it would actually count employees that did not come back to work for a variety of different issues, of which I think we just covered most of them. In my opinion, do you think a small business in the oil industry would fall into the FTE safe harbor number 1? Oil demand level of business in this industry has been way down. Wow, that's a great question that I haven't thought of, because I typically associate that exemption. That is one that you're going to want a little bit potentially more guidance on, I believe. I look at that industry, the price was completely shattered for a while, although it's rebounding. Obviously, the demand dropped significantly because of the virus, but that's going to be an interesting interpretation, and one that I'm going to, in my opinion, I'm going to give you a big fat I don't know. So I'll give you an I don't know, and I'm going to think about that one, because when you look at the oil, and that exemption is the one, whereas because of guidance and social distancing and other factors, I guess that's what. It maybe not be as direct as a restaurant, but obviously because of the stay-at-home order, people couldn't travel. If people can't travel, they can't consume oil products or any fossil fuel products. So, I'm leaning toward a yes on that, but you have to be the one that's comfortable with that, and I imagine you'd want a little bit more guidance. But, it goes back to the 3 federal agencies: Health and Human Services, the CDC, And also, so it's going to go down to the guidance that they have as far as employees, protecting your employees and protecting your customers. Um, but I could definitely make a claim for it in either direction. Okay, one more question. It's 105. Sorry about the voice today and the technical issues. We'll get it fixed. I don't know about the voice. But one last question. I know I jumped over one earlier that I wanted to come back to. And okay, my employees worked reduced hours. So they worked half time instead of full time due to the restrictions in business and revenues from March until August. And now we're at 20% of the time. Can I start my PPP covered period August until December? I was funded in May. And what you can do is you can go 24 weeks from May. So I don't believe you can go exactly till December, but if you were funded in May, that should take you into November. So what you need to do is you need to look at your funding date, and let's say you were funded on May 15th. And then if you went forward 168 days, if you went forward 24 weeks, essentially if you went forward 6 months, that would take you to plus or minus November 15th, and that would be the cutoff date. So you could start in August and go till November 15th. Okay, well, thank you again. It's an interesting time, and it's an interesting week when we don't get a lot of great news on it, and we still have big issues. And big issues are going to have some answers some really soon. So we'll be back next week. We'll be back next week and actually cover a lot of that for you next week. And so see you next week. I'm Kelly Bearden, and have a great day and keep on keeping on, people. Goodbye now.